Alright, welcome back to the KeanuTrades YouTube channel. Actually, I can't say that anymore because now we've changed our name and we've rebranded to Internet Accelerator, which I'm super excited to announce because there's a lot of upgrades coming to our Discord, our community, and basically what we're providing to you guys. So really quick here before the video starts, I'm going to do a quick little promo here. I know it might be a little bit annoying, but trust me, you don't want to miss out. So if you go in the link in the description down below, you guys can check out the website internetaccelerator.io. and you can find more information about our community. Like I mentioned, we recently rebranded. In that rebrand, we also merged with other Discords, and so now our team includes a lot more people, which means a lot more value to you guys. For example, for the trading section, which I know is what you guys are interested in, we added a new trader, KeanuTrades. In 2021, he turned $10,000 into over $1.7 million trading options, and he's going to be live voice calls every single morning for you guys. Definitely don't want to miss out because on top of him, we also have traders like KeanuTrades, Brian Trades, Tyson, myself, and just combined, there's so much value in this Discord, and that's only covering the trading stuff. We also have stuff on e-commerce, crypto, NFTs, basically anything online related that you can make money on the internet. We have it, and we don't only have it, we have people that can provide true value to you guys. We have people making 5 figures, 6 figures, 7 figures plus a month doing this stuff. So it's not like they don't know what they're talking about. They've proven themselves, and there's just a ton of value basically. So don't want to miss out on it. So check out the link in the description down below. It's a very tiny fee for the value you're getting. Like, you literally get that value back the first day you join. And if you don't believe me, we have a 7-day free trial going on right now, so you can test it out for yourself. You can probably pay for your membership within those 7 days, and then you're good to go. So try it out. There's no cost for you for those first 7 days, and like I said, you get access to tons and tons of really valuable people and information and all that good stuff, so don't miss out on it. But other than that, let's jump into today's video. We're going to be doing a trade review on SPX, and we have a very exciting trade review for you guys today. In this video, I'm going to be showing you guys how a trade that took a less than $4,000 investment ended up turning a profit of almost $20,000 in a single day. Basically, it was in a couple of hours. And this trade was actually provided by KeanuTrades himself, the GOAT. So like I said, if you join the community, you get access to his calls. He called this trade out live today in our Discord. So first off, I actually want to zoom out a little bit here so we can get a better picture of like what was going on overall here. So let's actually start off on the weekly chart for this analysis here. It's back to 0.80. All right, I don't know what's going on with Pico. I'm just going to take it off for now. Not really relevant to this trade anyways. I'm sure you guys are aware we had a pretty decent pullback the past 3 weeks. Or not the past 3 weeks, but you know, in these 3 weeks we had a pretty decent pullback here after this pretty massive run up. It was like a 12% run up. 18% actually, my bad. 18% runoff from the bottom here. Then we had a pretty significant retracement, 10% retracement right there. In a matter of 3 weeks, happened really fast. And then we got a bounce, which honestly was pretty expected. Anytime you get a pretty big move like this in any direction, you're always gonna expect that pullback. And that's why it's always recommended that you don't chase trades. Like, you don't want to chase trades down here when the EMAs are extended. This point down here, daily EMA was extended like 2.5%, which is really significant, and that's the reason you don't want to chase. So then we had a bounce, which if you look at the fibs here, whoop, that's going to bring up all my other drawings. Let me move to ES here so we can draw this without those other drawings. Okay, so if you draw out the fib retracement, you can see that we bounced all the way up to the golden pocket here, which is a pretty significant bounce. Honestly, I did not expect it to go up that high. I would have predicted that we would have gone to the 0.382. But that's also something I want to touch on here, which is the fact that as traders, our job isn't necessarily to predict what's going to happen. Our job is to always focus on that risk management and that risk reward on trades, which I will elaborate more in later on the video. But yeah, I definitely did not expect this run up all the way here. But the fact that we did end up running all the way up here made it that much better of a risk reward trade to the downside, because in the exact same way that at this point when we were drawing down, we were getting extended from the 90 EMA, as we were pulling up here and making this move up, you can say it kind of got a little bit irrational, and we definitely got extended from the EMAs. So that definitely contributed in allowing us to dump this hard once the time did come. Also, if you look at the volume profile, we came perfectly to this big zone here, which you can say is a supply zone for sure. And this has just been a crucial zone multiple times now. It was like kind of the top here in this previous big dump that we made to yearly lows. And then it also offered some resistance here as we were running up. Eventually we were able to break above it, but then we came crashing down, and we saw that big reaction here once we did break on back below it. And then once again it comes into play here as we push up into it. I've mentioned this before to you guys, but it's how it works. Something acts as resistance, and then resistance again. If you break above it, then it starts acting as support, but then if you break back under it, now it's resistance. So this was a perfect zone to be watching as a pivot potentially, and that's exactly what happened. And on top of that, we also got the catalyst, which is CPI, which really caused this to accelerate to the downside. Without CPI, I still think we would have stalled here at the minimum, and it could have still pivoted without the CPI, but definitely CPI played a big factor in that. But why is all this stuff relevant to the trade? Well, it's relevant to the trade because it's important to understand the overall picture. Even if you're only day trading and holding trades for a couple minutes, knowing the overall trend of the market, the overall big picture is key, because like I always mention, it's always better to trade with the trend. But how are you going to trade with the trend? Well, first of all, you got to know what the trend is, or what the overall picture is, because in order to structure big trades like this, where you're able to turn $3,000 into almost $20,000, the way you're able to do that is by having a better understanding of the overall picture and what moves we can potentially see. All right, so that's very key here. And just as we mark this supply zone here, I want to come over here and mark this zone here as a demand zone. Why are we marking this as a demand zone? Because like I just showed you guys, this was acting as support, and it's not as clean because you can see these wicks here. We did fall under it, but we really struggled to close down there. You can see all these wicks. That's pretty significant to note. Whenever price is wicking, especially like this significant, these are pretty significant wicks here. They're on daily candles as well. You can see that there was definitely some buying going on here, some demand zone, some support. So we're just gonna say this area was the support. So we bounced off, came to supply zone, came back down, and then we had a big breakthrough here. Again, whenever you're going to break through like a demand zone / supply zone, it's going to take some sort of catalyst, which we had at this case, and there was just a lot of heavy momentum. And usually when you see a zone break like this, you're going to get a big reaction, because, and I'll explain why that is. So here, there's a lot of people buying, which you can just tell by the fact that, first of all, price bounced off this zone when we hit it, and also by the wicks we were getting. So price was definitely struggling to break down, and so you know that there's a lot of buyers stepping in here. And then we got the extension upwards, and then we came back down. So why do you get the big reaction once you break the zone? Well, because you had a lot of buyers here. Where are they going to put their stop loss? Somewhere around here. And then once we're coming back down to this price aggressively, their stops are going to get hit, and that triggers this significant move down. Then we come back up, and now it's the opposite. Now we have resistance there. Resistance, some resistance here, but it was able to break through. Then a retest, so now it's support, comes up to the supply zone, eventually breaks through it, support, breaks back through it. And where can we expect us to go from here? Back to our support. Then we bounce up to our supply zone, back to our demand zone. So if you were taking a supply demand trade, you could have started making entries around here, and your target would have been all the way down here. Also, this right here, the fact that there's not that much volume here, there's like a lot less action here, that's also really important, and that's another factor in how we were able to come all the way back down and retrace this whole move that fast. Again, also the catalyst played a big role, but these factors also contributed into why this play ended up working the way it did. So notice this, that's very significant right there, and you can see that we did have a lot of action in the zone. It's not like we haven't traded in the zone, but when we've traded in the zone, it's always been quick action. It's always like we've already gotten big candles like this. This isn't the first time we've seen a big move like this in this zone. We got this big move here, which is similar to this one. It did happen in 2 days, but that's still a very significant move. We also had this big candle in the zone. This is also another relatively big candle here. 2 big candles here in the zone. Another huge candle in this zone. So that's very notable to note. That's not just a coincidence. That's happening because there's not a lot of volume here. There's not a lot of orders to provide resistance. I always mention to people that my favorite kind of trades are trades that have the least resistance to the left of the chart. What do I mean by that? What I mean by that is if you're up here and you're thinking of getting calls on this candle right here, Why is that not necessarily the best idea? Well, because you have a lot of resistance and a lot of stuff on the left of the chart too that could potentially stop you. So first of all, obviously this volume on the volume profile, that would be the first red sign of why I wouldn't love taking calls up here. Also, there's just a lot of resistance on the left of the chart. So you can see there's a lot of candles here, and you can mark all of these stuff like as resistance. Also in the past year, this has been a very strong support zone, but now that we're under it, it's going to be a very strong resistance zone. So you don't want to, it's going to be very tough taking calls here until we clear this area. Once we start clearing above like this zone right here, then you have a much cleaner runway. And now, instead of this acting as resistance, now that's going to be support for you once we break above this area. So then instead of having resistance to the left of your chart, you're kind of having that support, and the runway to the right of the chart is much cleaner. And I know this is a lot of stuff to go through, but all this stuff is important to why and how this play was able to happen, how Keanu was able to turn 3,000 into 20K from a single trade playing off this supply and demand zone. So let's start zooming in here and getting a little bit closer to his executions. All right, so zooming into the 15-minute chart here, I went ahead and marked where we opened here. So right here is basically where we opened at market open, 6:30 a.m. And I also came over here and drew this demand zone here. So just like I mentioned already, previous support turned into resistance. So this was support, we broke down under it, so now it's resistance, 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 resistance. Eventually broke back above it, so now it's going to be support. And then, you know, today we broke back under it, and we got that aggressive move. Why did we get that aggressive move? Well, we got that aggressive move because all the people that were buying and supporting this move up here, we're expecting this to hold as support. But once it fails to hold as support, their stops get hit, they got to sell out, and we get a big reaction, which you can see had some pretty significant volume on the volume profile, and then the volume thins out, so that makes it easier to just run through that zone. All right, so now hopefully that helped you guys understand. I know it's a lot to go through, and you might be like, there's no point in going through all that, but hopefully it makes sense, and hopefully that helps you guys understand you know, how these moves are able to happen. This isn't the first time this kind of move happened. It's not the last time this kind of move is going to happen. I'm not going to say they happen all the time, because they don't, but they happen just enough, and if you're able to catch them, you can hit those insane trades like Keanu did. So now let's actually go over, pinpoint exactly his entries, his exits, and we'll explain a little bit more of why he made those choices. So now we're on a 1 minute chart, so we're really precise here, and I've went ahead and marked his entries and exits. Because he was playing to the downside, obviously puts, I have marked the entries on red, so hopefully there's no confusion there. And I wanted to quickly go over this formula here, which is basically the formula to calculate profit factor. And basically, if you guys are unaware, to be profitable, you need a profit factor that's over 1. And what this formula includes is a win percentage. So what's your winning percentage? Are you winning half of your trades? Are you winning 60% of your trades, 70% of your trades, etc.? And then your average win and your average loss. Reason I want to point this out is because a lot of people, when they get into trading, they think they have to predict where the market's going to go. But I can tell you with 100% certainty that KeanuTrades did not know that the market was going to go from 4,000 all the way down to 3,115. He did not know that was going to happen. He might have had an inclination, an idea, a thesis. He could have had potential price targets down here, but he did not know we were going to reach there today. And I think that's pretty obvious. But a lot of traders, when they come into the market, they want to know how to predict what the market's going to do. They want to know what's the best technical analysis so I can enter trades and have a high winning percentage. But here's the thing. Keanu, I know for a fact, is a very, very profitable trader, but he does not win every single one of his trades. He's not always going to be right. In fact, there's a lot of times where he's going to enter a trade and it's going to go south. And that's why it's very hard to be a profitable trader just by copying somebody else. So even though, I know this is a little bit hypocritical of me to say, but even though we run a Discord here where we give out signals, I can honestly say, truthfully say, that I don't think the best value you're going to get out of the Discord is by following our plays. I think the best value you're going to get by joining a community like ours is by observing how someone like Keanu will trade, observing his entries, studying them, and you can still take his signals. I'm not saying don't take his signals, but in order to see the same profitability as Keanu, you would have to basically take every single one of his trades, because he doesn't know which trades are going to be the winners and which trades are going to be the losers. The only thing Keanu knows is that when he has a win, it's going to be a banger, and I'm not saying all his wins are this crazy, but it's a fact that more often than not, when Keanu is right, he's right, and he's going to hit those 100% plus plays. However, if you start nitpicking which trades you're going to take from him, and you only take the trades once in a while, it can be the case that you end up taking the 10 trades that end up being losers. And then the 1 or 2 trades that end up going crazy like this, you end up missing out on them. And so in the long term, you're taking counter signals, but you're still ending up losing money, even though he himself is winning and he's learning every single play that he's winning on. But if you're not taking every single one of his trades, you won't end up profitable. And I say this because, again, people think as traders, our job is to predict what's going to happen. That's not what our job is to do. Sure, it's helpful to have an edge in the market and kind of have those things that help you grasp the market momentum, the flow of the market, and where there's a higher probability that we'll move to. But that doesn't mean we know what's going to happen. So if you ever come into our Discord and you ask us, oh, where do you think SPY is going to go? We may give you like some price levels, some zones that we think are important. However, our ability to make money in the market comes from us having a strong risk to reward system. That is always going to be the key. Because as long as you can limit your losses, those wins will eventually come. They're eventually going to come. Even if you suck as a trader, even if you literally coin flip to when to enter trades, eventually something's going to hit. Especially if you're trading something like options, you kind of have that, can give you these exponential gains. So as you can see here, so you can see that these contracts moved from 50 cents all the way up. They hit like a high of like 20 plus, which is an insane percentage gain. If you calculate that, it's like a 4,000% gain. Let's say you entered this trade. Let's say you only entered one contract for the fact that it's simple to calculate the math. So let's say he entered one contract here at 50 cents. That would be 50 bucks. And he was wrong on the trade, right? So let's say market ripped up. All right, whatever. He loses 50 bucks. But if he gets that big reaction, which we know is possible, we don't know for sure it's going to happen, but we know it's possible because stuff of like the volume profile, all the stuff that we were studying with analysis on the bigger time frame, you know, all that stuff that we talked about, we know it's a possibility that SPY crashes all the way down below 3,950 and even more below that. We know that's possible. Okay, well, we're risking 50 bucks for the potential to make 1,950. Or actually, he sold these for 1980. So just for your guys' sake, I'll say 1,930. Do you see how with these kind of odds, your winning percentage isn't the end all be all? And what's more important is your average win and your average loss. So again, not every single trade is going to be this one. This is an outlier in some ways, and it's one of his bigger wins for sure, percentage wise. 38. So it means he multiplied his money 38 times, which equals to a 3,800% win. So that basically means he could have taken this trade here at 50 cents 38 times, and he could have taken that loss 38 times, and in that one time that it works out, he recovers all his losses. Let's see what that win percentage equals. You would need a 2%, a 2% win rate to be a profitable trader with these kind of odds. And again, this is a very special case. Not every trade is going to be like this, and as we can see, he sold a lot of them earlier, so the risk reward is a lot different if you actually calculate it. But the point I'm trying to make here is, as traders, our job is to put ourselves in the best position to have a good risk reward. That's what's going to give us the most edge out of the market. And hitting plays like this is how you're going to make a good amount of money. And the only way you hit plays like this is by letting your winners run. So now let's actually go in and analyze his entries and his exits and explain why he might have taken them the way he did. So his first entry was around here, His average price was at that point was 275. He got 10 contracts, so that's about 2,750 bucks. You can see he got filled at here at 850, so this exact candle right there. And this was near the low of days at the time. Reasons why he might have taken this trade, again, looking at that bigger picture, this is the area we were around. Look at that. It matches perfectly to our demand zone, this volume profile. We were about to fall off a cliff. Now, he did get in a little bit early, but again, it's because as traders, we don't know exactly what's going to happen. We can only predict. At this point, when he was entering the trade, he was like, all right, what's the likelihood that we retrace all the way back up? Very little. What's the chance we get a pullback from low of day here, or like a push up higher? There's a decent chance, but that's why he didn't go full position. He only got 10 contracts out of the 50 contracts he could have bought. I know for a fact that Keanu didn't go full position on this trade. He could have easily, if he wanted to, he could have bought 100 of these contracts. His account allows that. So you can see in the way he executed, he only decided to go in with 10. He still wanted a foot in the door because he saw this cliff here, and he knew that, all right, if we break this demand zone, which it looks like we're doing, we're going to get a decent reaction. Or at least we could. It's a potential. And he saw that, and that's why he made that entry. But again, he didn't know for a fact that was going to happen, but he was willing to take the risk. Okay, so he took the risk. He put on 10 contracts. Unfortunately, it didn't work out exactly the way he would have hoped. You know, price was very choppy at this point, and so he didn't decide to add more contracts. There was no confirmation yet to add any more contracts. We come all the way up here, and then something very key happened around here. So let's go to the 15-minute chart for this, because this is what I saw live, and I'm guessing he saw something similar here. So I've mentioned this before. If you guys have watched my live trading sessions, which I recommend you guys check out if you haven't, but I've mentioned to you guys that this is one of my favorite plays here. Once we get an extension and we get extended from the 9 EMA, at this point we were like 0.5% extended from the 9 EMA. I don't like to buy puts around here, so Keanu did. I wouldn't have taken that play personally because I would have wanted to wait for that pullback. But Keanu was still smart to take that play because he knew the risk reward, and he anticipated that there could be a possibility of a pullback. That's why he didn't go full position. He even mentioned, I think, that he was taking lotto size at that point. So Keanu made a very smart decision. He knew that there was the potential reward, and he was willing to add if we went higher. So like I said, my favorite play is to wait for this pullback and then see if we get a reaction. So I ended up taking, for myself, my own account, sorry about that, I ended up taking puts somewhere around here because we were retesting the 9 EMA. I expected us to reject there, and then that's what happened. So I ended up taking a scalp there for a nice little win, and then we went up higher. So at this point I was like, okay, I'm pausing on buying puts. This demand zone might hold at least for today. That was because every single candle tells you a new story. Every single candle gives you some more information. So these candles were telling me, let's forget about the right side of the chart here. Let's say we only had this information. Would you buy puts here? Would you add puts? Not necessarily. There's no reason to. It looks like we might get a little push higher. We're getting above the 9 EMA, so now that's support. Okay, but then something interesting happens here, something that I did not expect. So if you guys are not aware of how charts move, uptrends, the way they move is like this. It's not ever going to be straight up. It's not ever going to be straight down. It's always a move like this. And price really likes to get into these trends where you get higher highs or higher lows, should I say, and higher highs. So this is you'll see something like this very often. So if you can note that, what's this? A low. What's this? A higher low. What's this? A higher low. What's this? A higher low. What's this? A high. What's this? A higher 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 high. Okay, so that's how price moves. But what's very notable is to note when that flips, when that breaks trend. Okay, whenever stuff breaks trend, so I'm gonna have to redraw this here. It's not as clean as I would have liked. Actually, let me just clean this up real quick. Hold up. All right, that's good for our example here. So this is how price tends to move when we're in an uptrend. Notable times to take note are when this changes. So for example, if we got this, oh, okay, that's a red flag if you were you know, in calls or looking for upside, that's a red flag right there. And that's exactly what we saw. So we were healthy in an uptrend here. We even broke this higher high here, which was a green flag because we got a big rejection off this zone, but then we were able to recover all the way back up. That's a really, really good sign. We even saw an uptick here in volume. So at this point, I was like, all right, I was even considering calls. I think I did even end up playing calls somewhere around here for this push. But then we got this. We got an engulfing red candle that kind of breaks a trend, because now this was such a key level to break above. If we zoom in here, you can see how we struggled to break above it. We came up here, weren't able to break above it. Came up here, tried to break above it, but weren't able to. So eventually when we did, I'm like, all right, that's very significant. That's a huge win for the bulls. However, they weren't able to sustain that. And we ended up getting this big reaction off of it. So that's when Keanu ended up adding, he tripled his position here. He added 20 contracts. And at this point, they were much cheaper because theta, and that's how SPX contracts move. So whenever you're trading SPX, you got to factor that into your risk reward. The fact that these can drop 50% on you, 75% on you very quickly if you're not right. Like you can see here, the price that SPX was at was not much higher than where he entered, but they were still significantly less because of theta, the fact that they were out the money and all that stuff. So again, always when you're trading SPX, it's super risky. Factor all that stuff into it. So yeah, he made his entry there, and hopefully I did a good enough job explaining why he did that. If we draw kind of the trend here, you can see somewhat there. It's an uptrend. Took the line chart there. You can clearly see here it broke that trend. So that's where he ended up adding to his position, and he got a little bit more aggressive. He bought 20 contracts, but still this total cost right here was less than what it cost him to buy 10 over here. So it's not like he was YOLOing his whole entire account into this trade. So he added 20 there, reduced his new average on the trade was 125. And then let's see what ends up happening. So I'm sure, again, I'm not Keanu, so I don't know for a fact what he was thinking during this time. But I'm sure he probably placed a stop loss around there, because again, if we come up all the way, if we break the trend and then come all the way back up and then rejoin the trend, that would be a sign that, okay, these puts are not going to work out, at least not for today. So take my loss and head home, right? That's probably what would have happened. But because again, we can't know for a fact what's going to happen, so we always have to be ready for both sides. But in this case, it did end up working out for him. And I'm sure when he added these contracts, he was looking for his first target to be breaking low of day. That would be his first target once we broke this trend. Because you can say this trend was just a bear flag on the bigger time frame. You can see bear flag very easily. So his first target would be new low of day, and we got that. We got a new low day here, and we saw a nice reaction. So then he started taking some risk off the table. So now that his new average was 125, he had 30 contracts, which isn't a huge position for Keanu. I've seen him take much larger positions. However, it's always smart to take risk off, especially with SPX contracts where they can devalue extremely fast on any kind of pullback. He wanted to play it safe and take some risk off here. Again, trading is all about risk reward. Even if price has the potential to come all the way down here, Keanu didn't know for a fact it was going to happen. He had his foot in the door in case it did happen. He was going to be rewarded, but he also had to make sure that if this is the lowest we were going to go, he still was protected. So he was smart, and he took 10 contracts off here and another 10 contracts here, respectively at 165 and 170. So they were both for profit. Again, this was done just because we've had a pretty significant move here. Again, in the grand scheme of them, because things were crazy today, doesn't seem like a huge move, but he caught a pretty nice trade here. SPX went from 3,990 all the way down to 3,970. So that's a pretty significant move there. 20-point move on SPX is always welcomed. So he took his profits there, and this helps him stay in the remaining trade because now he's locked in some profit. He has less risk on the table because he's not holding his full 30 contracts. He's only holding 10 now. So if those end up going to zero, whatever, okay? So he ends up holding, and then we get this massive reaction. And again, early in the video, hopefully I did a good enough job explaining why this was possible, why, you know, price just started dying, and we got this big reaction here. So he ended up holding, and as momentum was in his favor, You can see here a good thing I like to do is use the 3-minute 90 EMA. If we enter a trend and we don't break above it, there's no reason to exit the trade. And Keanu noticed that. So at no point here, we got a pullback here, but we didn't break above it. So there's no reason to exit the trade, no reason to exit the trade. And then down here, just the fact that we were so low, he probably wanted to lock in some profit again. So he ended up selling 9 more here at 17.10, which is a huge gain on his 50-cent contracts. 50 cents to 17.50. You know, $50 per contract to 1,710. That's an insane win right there. So he ended up locking in some profits there, and then he ended up holding one remaining contract, which one contract might not seem like a lot, but at this point they were valued like at 2K per contract, and they were 0 TT. That's a pretty significant amount for most people. So he held the last one, and at this point, if the last one went to 0, he would still have made massive gains. Then we got this nice final push down, and so let's look at volume here real quick. Yeah, you can see that volume was getting pretty high here at this point. It wasn't necessarily like a volume climax, which is a signal I like to look at. So that didn't really necessarily happen, but we got a pretty nice bounce here. Again, looks pretty small, but it's pretty big. 3,924 to 3,934. That's a 10-point bouncer on SPX. So he probably saw that and he's like, all right, buyers are trying to step in here. You can see that uptick on the green candle there on volume. So then when he got the chance to exit the rest at basically 20 here, once we got new low day, he took the last contract off there. And then look at that, almost a perfect entry or a perfect exit there. And then we ended up having a pretty nice bounce here to end the day on a little bounce there. So yeah, those were his entries and exits. Hopefully I did a good enough job explaining his reasons for entry, his exits, taking risk off the table, why that's smart to do, why risk reward is super important in becoming a profitable trader. And it's not necessarily all about winning percentage and predicting what's going to happen. Nobody knows what's going to happen. We can only have an idea of what's possible, and based on those possibilities, position ourselves risk wise to, if it ends up working out how we anticipate it to work out, we'll profit really big. If it doesn't work out, we'll take a small loss, and we'll, you know, that's how we'll play our game. And that's how you end up being a profitable trader. But yeah, we're nearing about 50 minutes in this recording. Hopefully I'm able to trim that down to like 20 minutes or less. If not, I'm very sorry for the long video, but I know for a fact there's tons of value in this video. So hopefully you guys were able to learn something. If you still have questions, feel free to join our Discord. Again, we're having a 7-day free trial, so you can directly speak with Keanu, ask him questions about this trade, ask him questions about how he trades and all that good stuff, and you can see his plays. He alerts them live on the Discord. Like I mentioned earlier, we have live calls on the Discord every morning right at market open. But yeah, thanks for sticking to the end of this video. If you did enjoy it, please leave a like on the video. Feel free to share it out with other people, other traders you may know, and definitely don't forget to check that link in the description down below, and definitely check out KeanuTrades. Shout out to the GOAT, KeanuTrades. His Instagram, Twitter, and all social links will be linked in the description down below, so definitely give him a follow, check him out. One hell of a trader, definitely a must follow if you're a trader yourself. But other than that, I'll catch you guys in the next video. It's been me, Zero, and I'm out. Peace.